Hello and welcome everybody. We are gonna get started here in a minute. It's gonna be a smaller group today. We had another workshop about rentals a couple of nights ago. So uh, thanks for being here. If you can come on video though, that would be very helpful. We are doing this live, meaning we're here in person on Thursday evening. So if you can come on video, it will be easier for us to share the information with a lot of you. Thanks, Jennifer. And anybody else. And don't worry, it's gonna be a very small group. We're not gonna record and put it out there for a lot of people to see. This is very informal. So if you can come in, that would be great. That will help us, give us more information. And that's what you're here for, right? To get information tonight. We're gonna keep this very short and sweet. We're gonna give you less than an hour, and we're gonna be a little different than most of the webinar you're used to. We're gonna jump into it here, and also we are going to give you an exercise here so that you can kind of see how this develops and how rentals can work for you. So in the meantime, if you want to make sure you have pen and paper available, we can jump into the exercise here in a few minutes as well. Okay. It's going to be very helpful. Like I said, we're going to breeze through it pretty quickly. So the first thing I'm going to do is just trying to keep us on a schedule. I'm going to actually share some slides. So bear with me here.
And in the meantime, would you mind putting in the chat where you are located so we get an idea of the types of markets that you're working in or that you would like to work in?
Okay, so I'm trying to, I usually Liz does this, so I'm not really sure.
It's all good. This is fun, and I love that we're going to be
Okay, so
all group.
okay. So the topic today is inflation-proof real estate strategy. Why rentals are the safest bet today. We're going to call the elephant in the room here tonight, right? Which is what people are worried about right now. What is going on in the world? If, economy, what's going to do? If real estate here is to stay? Well, I have good news for you guys. Real estate is not going anywhere. It's probably the oldest, I don't want to say profession out there because that's something else. But it's one of the oldest professions out there. But the thing is, think about it. Before even Jesus was born, people were buying and selling real estate, right? So one of the things I always say is that strategy never changes. So if we're talking about rentals, we're talking about wholesaling, we're talking fixing property and so forth, those strategies don't change. They exist. They're universal. What changed though is things within the strategy. How you're going to get leads, the best way to get leads, how you get the money, especially now with AI and a lot of things we're seeing some big changes out there in the industry. Okay. So that's what you need to pay attention to. As far as you buying and selling and renting, it's here to stay. Okay. So don't worry about that. Okay, so now one of the things I want to say is you can download our guide to passive income with real estate investing, and the team is going to put a link here. We are broadcasting this through different social media channels. So here you guys are on Zoom, but we have Facebook, YouTube, and other channels. So here is the link for you to download this free guide. Now, this guide is very, very interesting, by the way. I was actually reading it today again, and it covers from short-term to mid-term to long-term rentals. I put together this for giving you a bigger picture. There is also the exercise that we're going to do tonight is actually one of the exercises in this guide as well. So, and also there is another exercise in there that helps you to analyze deals to see if they're good as rentals, if they're cash flowing for you, if there is something that you should add in your portfolio. So make sure that you add that guide, you download the guide through that link. Now, we do a lot of things here together. This is a picture of the retreat last year. We're going to have another one in September. So, we're here really to empower women and some men that are in the mix there to really get into real estate. The men there usually are either the partners, the boyfriends, or the husbands of the women are there, but they're welcome to attend as well. But let's talk about you. I would like you to give me in the chat, and also Alex or Doreen, if you look at the other channels, anybody else that's seeing us throughout the channels, if you want to add in the comment section, the bigger question of the hour is, why are you interested in rental properties? Why rentals? So I'm going to read some of the chats here, and Alex, you keep an eye on the other channels. Let me know if any other questions you want to bring up. You can chime in, okay? Okay, so why rentals? I'm going to stop sharing here so I can see all of you. Okay, long-term wealth, yes. The real estate rentals is one of those strategies that are going to be here to stay, right? It's going to be here forever. And by the way, let me introduce Maria. Sorry, Maria, I kind of got going here.
It's all good. I'm enjoying.
So let me introduce her. Usually it's Liz, and Liz takes over, but Liz is in wholesaling. She's not into rentals yet. So Maria is one of the coaches in our community, and she has actually done wholesaling, rentals, fix and flip, money. So she's going to be sharing a lot of her tidbits tonight as well. So Maria, you want to introduce yourself?
Yeah, absolutely. I'm super excited to be here. And actually, Liz is a little bit sick as well. So I'm glad she's taking the evening off. But I've been in real estate since 2007. And as Laura said, I've been not only doing all kinds of different things, but also been through the ups and downs. So let me tell you guys, and you already probably smelling it out there. The market is changing very quickly, and we have a window of opportunity, and I'll tell you a little bit more about this later, but basically we have a window of opportunity where by the end of 2026, prices, because of the undersupply of housing, prices are going to start going up. So this is our window as investors to actually accumulate rentals, because rents have been kind of held down by some of the construction that's been going on, but that construction is actually coming to a halt because this construction that was started a couple of years ago, because it takes about 2 years to bring stuff to market. So we're having a glut of new construction right now. That's going, basically construction is going to stop after these new units are coming on the market. So we are in a golden era right now, because we will be looking back in 5-10 years down the line and be like, man, that was the time to buy. So you are here at the perfect time, and we'll definitely give you all the data and all the lowdown on this. If you're not familiar with what's happening in the rental market. But one thing I do want to say, because it was interesting here, and I get it. This is what I used to think about rentals as well before I started, that it was just long-term wealth. So when I thought of long-term wealth, I thought, man, it's going to take me a long time to even make any money out of these. That's what connected in my mind. And I wonder if some of you think that's what it is, because every time I see, mom and pops own these, they're not professional investors. So people that say have full-time jobs and they're like, I'm just going to buy a rental to have it. I heard it's a good thing, so I'll just buy a rental. And then they have to feed this rental for 30 years. They never really make a lot of money out of it. That's not what we're doing, guys. We're going to show you that while you are building long-term wealth, we're going to show you that there is real money in rentals, and it doesn't take a long time to actually see it come through. So we'll go through an exercise. You will see all of that. You can build passive income very, very quickly. And then, of course, you can build an empire if you enjoy it. No problem. But it doesn't mean that you have to wait a long time to see this come across. But I don't want to jump ahead, Laura. I get excited when we talk about these things.
Well, I think I want to, and we will share a little more of our stories. But the thing is, I personally got into rentals because I wanted to build cash flow right now, and I know, I mean, which job can you go and get a 20-25% raise every single month, right? Think about it. If you buy some property, you make $1,000 on this property. Next month, you buy another property. If you had a job, even that would be about 20% a month. Now you make another $200-300 cash flow every month. No, I don't know about you guys, but I have never seen a job you can make a 20-25% raise or more every single month. So, and on top of that, you get all the tax deductions. So, you don't have to worry about, claiming all your taxes, how many dependents and all of that, because if you do it right, you can claim and write off most of the income. So it's actually tax free. But, I'm getting ahead of myself on that one too. So, okay, so you want to build a long-term investment strategy, but also, cash flow today, build a real estate portfolio and grow wealth. Anything else that you want to share? And while you do that, I want you also type in what you feel like your roadblocks and challenges are right now to really get going with rental properties. And I can tell you right now, go ahead and write them in. But I can tell you right now, there is a lot of misconception out there. There's a lot of misinformation about what you need, right? Investment funding, that's the misinformation. Creative financing, that's more along the lines of what we're going to talk about today. We're going to share some case studies about that. Funding. Okay, so what if I told you the funding is not an issue? Would you buy rental properties? No, yes, no? What if the money was not okay? Thank you, Scotty. So what if the money is not an issue, right? So we're going to talk about that today, because when I got started, I didn't have a lot of money. I didn't even have a job. My credit was very new. I was just finished college. So, I didn't have a lot of the resources. And a lot of the people that I work with, the students today, they come from the same type of thing. Either, Maria is going to share a story about Letitia. Letitia is a stay-at-home mom, and she didn't have a job. She stayed home with her kids, and she didn't have an income, and so she had to get really creative on how to get properties. So yeah, we are going to address this here. So what would help you then really get this going? What if you had a magic wand? What would be this thing that is going to get you going in rental? What is the thing that's not clicking for you? Anyone want to share there in the chat? And Alex, are we getting anything from the social media channels? You can talk, Alex.
She says she's checking now in the chat. Yeah.
Okay. By the way, Alexandra is also my daughter. We have Liz. A lot of you know her. Alex is my other daughter as well. And I have a third one too. And then I have a boy. Finding the ideal property, right? Finding the ideal property. Well, that's a matter of analyzing deals, which we're going to talk a little bit about today. Now, let me share with you a couple of things, and then we can start jumping into here. So I want to share with you some of the things that we have done here over, bear with me. Okay, so we like I said, I also wrote for different magazines like REI Wealth, Realty 411, local newspapers. Me and Liz were on NBC News Miami 3 times, I don't remember, 3 or 4 times for sure. And actually the anchor woman there became one of our students. So she was interested in doing fix and flips here in South Florida. So it's I have to say the story. So I did a meeting one time with the students here locally, and she walked in and everybody was like starstruck, because everybody knew her. She's this gorgeous woman, perfectly dressed. And she came in and everybody was like looking like, oh my God, I can't believe she's here, right? Because she's big here in South Florida. And then we do intensives. We get together. The next one is in September. So they're a lot of fun. You can see the picture here, Maria at the bottom and Liz. And yeah, we do this get together. We do this about once a year, and it's a lot of fun. So you will get more information about that as well. And before we jump into here, the core of the information, last chance for you to download the ebook, which is about passive income with real estate investing. So go ahead and team put the link again and download the ebook. Lots of great information from midterm to short term to long term, how to get leads, how to find tenants, how to analyze deals. So a ton of good information. So make sure you download that as well. Okay, so now let's go ahead. We don't have Liz here today because she's like, I'm not doing rentals. So I have nothing to say. Okay, let me share with you. Okay, so let's go ahead and get started, Maria.
Yes, so I have some questions that I'm going to ask Laura, and so that way she has a chance to explain some of the most important things we're seeing right now, just to give you some more clarity and confidence in what the right strategy is. So, Laura, let me ask you. So, with all the fear in the headlines, why are you confident in rentals right now?
Well, one of the things I said is that, rentals is here to stay, right? It's been here for before Jesus was even born. Like I said, it's the older profession out there, right? If we want to say it that way. But the thing is, it's just one of the things that people need. And on top of that, because of the industry right now, with the interest rate, the inflation, and everything else, people feel like it is still, they're kind of waiting on the sidelines. We also have a lot of the younger generation, the millennials or even younger, stepping in. And they want to see, they don't want to put their money into a house. Where the baby boomers, that's the generation I was born into, we had the plus ultra is you get a good job and you get a house. And now people are more transient. They want to do more traveling, more experiences. They don't want to put all their money. So a lot of this society and priorities have changed. And this happened especially after COVID too, right? People have seen that a lot of the things they believed before are not the case anymore. So it is, and also we're shifting. We're shifting more to a buyer's market. There is about 25% more inventory of properties right now than buyers on an average nationwide. So that means that is a shifting to be the buyers have more choices. So for investor though, that is great because now the sellers are more willing to negotiate.
Perfect timing. So why is this a buying window in terms of where do you see the competition being basically with the investors?
Yeah, so because we're shifting more to the buyer's market, and the rents are actually very, very competitive down. They're rising. I'm seeing area where we don't have the cap of how much it can raise every month. They're going up 10 to 20%, I'm sorry, a year, 10 to 20% a year. So, I was looking at Liz was actually showing me in a rental agreement where they went from $7,000 a month to 11,000 in rent a month. And so there is no cap here in Florida. So the thing is they can raise those type of rents. So there is a huge rent demand and obviously people are paying it and so they're charging it, right? So that's where we're seeing this. And so this is a really perfect time to get into rental. And if you're wholesaling, again, who is your avatar of the buyer? Is either a rehab or a landlord, right? So there is a huge market for people that need these type of property. And if you are a landlord yourself, there are people that want to get out of the system there, or you can also partner with wholesaler to bring you deals. So honestly, it's a much easier strategy to rent than wholesale, in my opinion. And we're going to see this trend probably for the next couple of years. We're going to see this strong rental market and demand for at least another 2 years. So
Awesome.
now we're going to flip here the script and I'm going to talk to Maria. Okay. So you're also a real estate agent and you're a real estate agent in a city, St. Louis, which I know very well. I invested there for many years, but also where there is a huge multifamily market. One of the things I personally like as a landlord is to invest in 2 and 4 units. Okay. So it's strong in St. Louis still, but some areas though are suffering the multifamily. So do you want to tell us a little bit of the different dynamics? And also as investors or people trying to become a landlord, what should they look for?
Yeah, that's a great question because when we talk about multifamilies, it really depends. You really have to specify what you're talking about. So multifamily in general, people are normally referring to big apartment buildings, However, when Laura and I talk about multifamily, we are referring to residential real estate, therefore up to 4 units. So both Laura and I are lovers of 2 to 4 units. They're called duplexes, triplexes, and fourplexes, to be clear. So what's happening right now is that there is, when I was referring to the construction is happening in apartment buildings, and there's a lot of construction that was started 2-3 years ago, even when the market was very different. But once these people broke ground, these developers broke ground, they had to finish the project. However, a lot of these projects have become upside down, basically, because the interest rates have been resetting and getting higher. As you well know, interest rates are higher than where they were 3 years ago. For that reason, a lot of these developers are suffering, and they are creating a lot of competition in the high-end markets, let's say brand new units for rents. There's a lot of downward pressure on rents. And the other end of the spectrum, in the especially in areas like in the Midwest and Northeast, outside of the big metropolitan areas. For example, for me in St. Louis, it's the same thing because it's not a big metropolitan area. You can find absolutely smaller apartment buildings, or especially single family homes. There are a gold mine right now. And the reason is that the rents are not as much under pressure. So the rents are solid. And as Laura was mentioning, they're actually going up. I know I've raised the rents on my tenants every single year. And I'm still under market somehow. I don't know. But I do like my tenants, so I want to keep them. But the single family homes, when you think about it, I'm sure you know the interest rates are high right now, and a lot of buyers cannot afford to buy. And therefore, a lot of these sellers end up selling to investors, who are the ones that, because we know how to finance things without going to traditional banks, it's what we were referring to. There's so many ways of purchasing property. Because of that, we were able to buy single family homes. Now, keep in mind, single family homes are a gold mine. In fact, if you need any more proof than this, Blackstone and BlackRock, which are the biggest hedge funds in the world, they basically compete in a single family home and try to buy as many as they can. However, as it stands right now, there is more supply than demand, and that's why this is such a perfect time to buy rentals, single family home rentals. And again, the area of the country does matter, and this is why we teach investing virtually. And I'll show you a case study in a little bit. One of our students, but a lot of our students do this, where she bought all her rentals from California. She bought them all in the Midwest, in fact, in St. Louis. So this is fun. It's really different ways of thinking about things, where you basically are not stuck competing with investors that are not making the money that you want to be making. And we definitely would want you to make the money that you're supposed to. So yeah, so it really depends on where we are looking right now.
Yeah. And one of the things I always say, it's like you don't have to reinvent the wheel, so like the Letitia that Maria was mentioning about is in California. Why did she invest in St. Louis? Well, she knew I had been successful in St. Louis. She knew Maria is successful in St. Louis, and we were her coaches. And she's like, well, if the coach is buying St. Louis, I'm going to buy in St. Louis. Right? And actually, we have our students that did the same thing. I know you're working with other ones. And I'm not saying St. Louis is where you should buy, but I'm saying is when you get into the community and you see other ones being successful in certain areas, why not? There is enough for everybody. The abundance is out there, and you want to buy an area that makes sense, right? Where you have cash flow immediately, because most of you, I think, would like to get into long-term wealth, but also into immediate cash flow. So Maria, you want to go ahead and jump on the fifth cue card, and then we can start doing the exercise. So make sure that while I answer this, first of all, pay close attention, because I'm going to test you here in a minute to make sure you paid attention. So,
and by the way, ladies, we're going to answer all your questions in the chat. So just keep putting them in there. We are not going to forget. We just want to make sure that we are respectful of your time, because I know for some of you it's going to be later in the evening, and we're trying to get through a lot of information. We're trying to give you as much information as we can. So we're keeping ourselves in line here, Laura. With Laura and I, when we start talking about real estate, there's no telling. We could be here all night. So, all right. Well, Laura, how can someone invest conservatively? Did I say it conservatively? This is our Italian coming out right now in rentals.
Yeah, by the way, I didn't say, but both me and Maria are Italians, but they're just pure coincidence. We both grew up there, went to college there, and then moved to America. So we're full bore. But we just stumbled into each other when I was doing a lot of pre-foreclosure prevention and short sales. And Maria was a short sale specialist. That's how we got to know. So we've known each other for close to 20 years. But yeah, we
Yeah.
never speak Italian, funny enough. But anyway, so conservative. One of the things I got into rentals, and I always firmly believe that you have to get in for cash flow, not so much for appreciation. So now, when you go into a rental portfolio to buy rental properties, I want you to have at least 5 to 10 years that you plan to keep these rental properties. You don't get into rental planning to sell next year, right? I mean, things happen, life happens, but usually you want to keep at least 5 to 10 years. So there's going to be hopefully some appreciation. But I can tell you right now, some properties cash flow amazingly for me, but I didn't really much appreciate in 20, 30 years. So, there has to be a combination of both. So to be conservative, there are a couple of things. Number one, you want a property to cash flow from day one. They always say that you make money when you buy real estate, right? And that's the thing. Does it cash flow today? Does it make sense? Am I going to cash flow next month? You don't want anything that's going to put you in red, because most lender will take only 75% of rental income to qualify you for the mortgage. So if your rental income, if there is not enough spread, guess what? The part in red is going to come out of your income on another rental or your personal income. So you want to keep kind of the 75 ratio. So one of the rule of thumbs that I use, and make sure you write this down because they're going to part of the exercise, is I want to make at least $300 per door net. So after I take off principal, interest, taxes, insurance, maintenance fees, HOA, if you have to pay utilities, if you have to pay a management company, all of that. After you take all of that, I want to make at least $300 per door. So if it is a two family, it's going to be, 600. It doesn't have to be to the penny, but just to give you an idea, let's say $600. If it's a four family, it will be $1,200 and so forth. Now, some areas can be a little less, some areas can be a lot more. It's hard to me to give you around the country. That's something you have to establish as a guideline. One of the first work assignments I do with the students, they have to study the area and also come up with a baseline of what they can expect reasonable cash flow in the area. And when we talk about area, we talk very specific, like certain zip codes within a city. Because even with St. Louis, right, if you go in one zip code, this is what you get, but you go areas like Clayton or Brentwood is a total different ballgame. So that's the thing you have to understand. And there is a lot of tools out there. I did actually a live the other day where I was sharing with a lot of you what the tools are out there nowadays to get this information. So you have the $300 per door. So let's say that you have actually I'm going to choose the right example. So let's jump into the exercise and make sense right here. Okay. So take pen and paper, and I want to share in the chat, what do you realistically would like to make within a reasonable amount of time, 1 to 2 years, monthly from income, from real estate? And it has to be something that you totally believe, not something that would be nice. You need to wrap your mind around it, that you think, and once you have the information and you know what to do, where to get the money, where to get the leads, you can do it. So can you type in the chat and also write it on your paper? And I'm going to tell you how that works. 5,000 net. Okay. Anyone else? 5,000 per month. Okay. Okay, so let's take 6,000 if that's okay, per month. Okay, just to make the numbers a little easier. And like I said, it's all based on the net per door. So if you want to make $6,000 a month and you make $300 per door, how many doors is it gonna take? And door meaning if it's a single family is one door, if it's a two family is two doors, if it's a four families, four doors, and so on. So let's say that if you want to make $6,000, how many doors is that? 16 is more about, I think, 5,000, right? Probably.
Yeah.
20 doors. Okay, so 20 doors. So now that you know you have to get 20 doors in order to get your 6,000, right? And how many what would you think would make more sense to get to the goals faster? So let's think about this. It's going to take 20 single family homes, which Rita, one of the ladies I knew, she's in the book there in the back. She actually brought 21 houses in 11 months. It can take 10 duplexes, or it can take 5 for family. Right. So, like Mary said, 5 for duplexes, about 10 duplexes, or 5, no, 4, 5 for family. Right.
Yes.
So now, if you do a combo between 5 and duplexes and 4 family, and you say you bought one a quarter even, or every couple of months, you see that in 2 years you would actually get to the goal and surpass. The magic happens too, that the rents are going to increase. So if you buy with today, in a year or two, you get an automatic increase on your rents. So when I started doing this plan, I actually started in the beginning buying, I was very aggressive, buying one property a month. And then because my goal was to have $5,000 in a year, but I was taking a little lower baseline per door, but I actually doubled that in 18 months. So it is very possible to do. And that's how we do it. And Maria, you want to share the one, because they say, yeah, well, you did it, you started doing this as a newbie long time ago. No, I do this today as well, and that's what we share with the students. But I want you to share, Maria, about the 4-unit building you just did.
Yeah, and the Sandra is asking how much we have increased rent on them as well. So yeah, let me just tell you about it. So, and this also answers one of the many ways that you can fund things, because that's the thing. There are so many ways of funding these that we're led to believe there's only one way, which is the one that's advertised, right? Is go and get a traditional loan. Many of us don't have either maybe the income, the credit, or the funds to even put a down payment on a traditional loan. And they want you to believe like, oh, then you cannot buy these. Meanwhile, so many people are accumulating so many rentals without doing any of that. So it will go more into detail, but just to give you one different way of doing this. In this particular case, actually, we did get a loan, but just to tell you, for example, I have always been self-employed. So when it comes to traditional loans, there's only so much I can do. But in this particular case, my partner, my boyfriend, he has a W-2, but I didn't want to put down any cash, or as little cash as I could was my goal. If I could have put down zero, that's what I would have done. But in this case, we use house hacking. Now, why do we use house hacking? It was a particular case where this made sense. So we bought a 4-family. This was almost 2 years ago exactly. Actually, in 4 days, it's going to be exactly 2 years. And this property was already occupied, except for one unit, because when you do a house hacking, you need to basically, you are getting a loan as a homeowner. Basically, you can even get an FHA loan, which means you can put down 3.5%. In some areas, you have to put down 0%, because there are loans that are even better than FHA loans. For example, USDA loans come to mind, but there are others. So you may have to put down nothing to buy a rental. In this case, my boyfriend lives in the building, and then the other 3 units maintain the entire building, meaning that 3 units will maintain the building. The 4th unit is pure profit. Now, because we have rules, right? As Laura said, we want to make $300 per door. So when I purchased this building, actually, it was about $250 per door. This building was cash flowing $1,000, which is already awesome. These, you negotiate the deals, and of course we teach how to do that. And then once that happens, I started increasing rents, and every year I've increased them about 10% a year. And so, for example, it went from I want to say when I got him was 100, and I went to 1,100. Now, being the 2nd year, we're higher than that. We're around 1,200. So of course, as a percentage, it starts getting a little bit less, but it's at least $100 a year. What I'm also doing is I am updating the property, and I'm going to refinance. And in fact, I'm in the middle of doing that right now. We're doing repairs, or we're renovating the property to be able to refinance. This is why, at the end of the day, the point with rentals is that I don't know if you guys have heard this, but the strategy is you borrow, whatever that looks like, doesn't have to be from a bank. Then you have your tenants pay off the loan. So it's like somebody just gave you an asset for free. and then you borrow again and you do it again and again, and then you die basically. And then and it's a step a base for taxes. It's an amazing strategic purchase. Every rental you buy is like a savings account that only keeps giving you money. Every few years, you go in and take out a ton of money, and then you do it again. And you never have to pay this off because your tenants do that for you, in addition to all the tax deductions you get. And that is tax-free money, by the way. When you refinance a property and take, say, $100,000 out, that's just a gift, because you can go and invest it in the next property and you never have to pay taxes on this. Guys, if you wanted to know how the wealthy make money generation after generation, this is it. They use the tax code to their advantage. They do what the government wants you to do. And what does the government want us to do? They want us to provide housing. So when you do this, you're stepping into a whole new game of life. It is incredible what rentals can do for you. You don't need a million of them either. So in this particular case, with this one fourplex, we did it this way again because my boyfriend happened to be renting at the time, so he needed a place to live, and we're like, why not have somebody else pay you while you live there? And we are in the process of refinancing. We'll take this money out and we'll buy 2 more properties. We'll use it as down payment on 2 more properties. This is how quickly stuff happens. So it's very, very powerful. And what Laura was asking is, you can absolutely do this with single family homes. It just means doing more transactions, say 20 transactions. Or you can do it with 4 families. I am focused on 4 families for the simple reason I am a little bit older and I'm trying to build my retirement. So I'm not interested in doing single families anymore. I've owned single family rentals, but in this case, it makes more sense to do multifamilies. And you can absolutely increase rents. What will end up happening is the way we'll teach you to find deals. Your rents will probably be under market, so you'll be able to increase rents very quickly. And then that's just extra cash flow you weren't even counting on, because it's already going to cash flow when you buy it, and then the rest is just gravy. So you might get to your goal much faster than you even think right now. But the exercise we're having you do right now is extremely important because it puts pen to paper, so you can see a black and white. This is just a math game you're doing here. Is deciding what is the strategy. Am I going to do single family homes, duplexes, or whatever? And how many deals do I have to do? So this gives you clarity, in exactly what the path is going to be. The rest is know-how, which absolutely we can teach you how to do that, but you need to have your path in mind, what makes sense for you.
Right. And, seeing some of the chat here, yeah, it's definitely possible, like Maria just talked about house hacking, to do it. The main thing you have to do is obviously study the markets, right? Like, for example, if I want to get into here in South Florida, it's hard to get into making money with house hacking. But if you go in the Midwest and so forth, and that's one of the questions I'm going to ask here, Maria, in a second, about the different type of markets where it's really more, it makes more sense to do something like this. So like the lady Rita that bought 21 houses, she did it in Cleveland, Ohio. I personally built my portfolio in St. Louis. It makes more sense. You're going to get your numbers much faster. There is more room to maneuver, and the sellers is older type properties. The sellers are older. They are looking to really move some of these properties. So there is more room to move than some of the markets like here in South Florida, where there is a lot of new construction and and the prices are pretty steep. Okay, so did you do the exercise? Did it make sense once you put pen to paper how you can do that? Like I said, you can buy like 4 duplexes and 3-4 families to get you to your $6,000 a month. Now, some areas like in Cleveland, she was making $400 to $500 per door, and some areas like in South Chicago, you can make that per door. So it really depends on the areas that you're in. But does that make sense on how you get to those numbers? Let me know. Say yes, no. Was that pretty clear? Yes? Okay, good. Yeah, and the question you guys have, I really want to answer them. I'm itching to answer them, but I want to keep on schedule here for anybody of you that wants to get off. Now, I want to mention something. We do have a program. It's called Rentals to Wealth, and it's shutting down at midnight. And the reason that we're shutting down at midnight because we take care of certain group of people, get them to the next level before we open it up again. I don't know if we're going to open it up anymore this year. because we're working with people that do rentals. We're also working with people that do wholesaling. So I want to get these students to a certain level before we open it again. So if you are interested, make sure that you go and check it out. You can. We're going to share you the screen in a moment and show you what you get, everything you get with the program. The other thing I want to mention also is you have lifetime access if you do the pay in full option. It's very affordable. We wanted to make it super affordable for everybody. We also have Klarna and a firm that you can use to break down the payments even smaller. So check it out here. It does end at midnight. We have only, I believe, 3 or 4 spots left for the one-on-one game plan with the coach. So if you're interested, say, I want somebody to really tell me what I do exactly, which area I should do, what is my plan, how we can do it, where I can get the leads the fastest way, depending how aggressive you want to be, but I can certainly do that. You need to go ahead and book. I have room only for 3 or 4 more people. I don't remember. We had some sales today, so we went down a bit. Okay, so yeah, Sandra, go on that link. All the information is on there. Okay, so let's move forward. And let me ask you this. What markets are seeing rent growth right now? And I'm going to share with you guys a little golden nugget here in a moment. But go ahead. What markets you see
Make it super quick. Basically, the Midwest and parts of the Northeast is where to invest right now. We just have the market holding better. And the reason is that in a lot of the West, East Coast and, the usual suspect areas like Texas and so on, there's a lot of new construction, Arizona, all those places, which is great for renters. But because there's rent pressure and all of a sudden, these developers to fill their units, they're offering free rent. So if you're a renter, this is great. But again, this is going to be short-lived as well. So I would focus on the Midwest and parts of the Northeast. We, as Laura mentioned, we teach you exactly how to strategically decide the areas, because since you can do this virtually, why won't you do it in the place where you're going to build a portfolio that much faster? And it's going to cash flow that much more. It just makes sense.
Yeah, some areas that are actually kind of on the up and rise, and that one of the reasons I think is because they haven't really been on the spotlight is Pittsburgh is an area, Cleveland is another area. So those areas are kind of getting a second wind, especially when it's coming to rentals. And so also for wholesaling, because at the end of the day, as a wholesaler, you supply properties to landlords, right, to do the BRRRR method and so forth. But I just wanted to kind of throw those 2 areas are really on the coming on the radar, but not quite there yet, so you can jump ahead. So now let me ask you, what red flags should investors look for when getting into rental properties?
Yeah, so definitely you want to stay away from any area where the population is shrinking fast, because obviously there's going to be less housing needed if there are less people. That kind of makes sense. But also you want to stay away from areas where they have a lot of new construction, because again, these developers are going to be under pressure to fill units, and you may be competing with them or against them for renters. Another thing to watch out for, and this might be within the same city where there are a lot of great rental opportunities, you might have areas that have high vacancy rates, and that will depend basically on the type of neighborhood. So in real estate, we sometimes refer to Class A, Class B, Class C, Class D areas or properties. In this case, I would focus on Class B and Class C, which is going to be not your Class A type that is like, the most high-end, exclusive, luxury, whatever, but a little bit below that, Class B, and even better, the ones that cash flow the best, they're normally C or C+, which is going to be your blue collar areas. These areas tend to be stable. And again, you can increase your rents based on basically inflation or whatever it is. And there aren't that many places, because a lot of owners will upgrade things, and a lot of areas are growing. There aren't that many places where these renters can go. And another thing I do want to mention is that it's part of the news. You guys may or may not know this already, but it is forecasted that we are becoming a renters nation. because I was mentioning earlier, and therefore a lot of people, basically there are more renters than people that can afford to buy houses. So these areas, these blue collar areas, these people cannot afford to buy houses, so you really have a stable renter base.
Yeah. And which brings me to the next question is, I guess it's more of an observation, is that the rental market is really getting stronger also because the new construction is slowing down.
Yeah.
And and there is a lot of older homes, especially in older cities like Atlanta, Chicago, St. Louis, Indianapolis, Cleveland, Pittsburgh. And that's what these homes are getting recycled. There is also a lot of incentives from cities, the city administration, to rehab these properties. So there are grants, there's money to do so. And then also they came out years ago with the opportunity zones. So that's a lot that is moving into that direction more. So, kind of piggyback on some of the stuff that you say. And so what should these smart investors then do now?
Well, in general, very first thing, and this is how we have actually set up our program to first of all look at the area, and we're gonna teach you how to pick an area that makes sense for what you're trying to achieve. Okay, and then after that, and we even call it pre-training because it's so foundational. You need to be in the right area, otherwise it's not going to work as well as it might work in other areas, which we've talked about. Then we teach you basically how to break down everything we do in real estate is reverse engineer. So how to break down how to get to your goals and what that's going to entail. And based on that, you want to look at, again, type of property. You may be looking for single family. You may do a mix of single family, multifamily, etc. And then how to, I see a lot of questions that, again, we'll get to shortly, where how to basically get your boots on the ground, because we do this virtually. Get your boots on the ground, which might be a great property manager or a great realtor or whatever the case might be. So we're not going to have the toilet is broken calls at 2 a.m. to deal with. That's not what we do. We are empire builders. We don't fix toilets unless that's your thing, and that's totally fine. More power to you. I cannot fix anything. I don't know. The toilet would be broken forever. But basically, we teach you all the different ways in which this becomes a business that you can run with very little time investment. And because a lot of us have, I'm a single mom, for example, I do a lot of different things. So we can't dedicate necessarily all our time to doing real estate. Many people have full-time jobs or whatever the case might be. And then basically the point is, you make a plan for yourself how many units you want to buy, and based on that we'll teach you what kind of financing you can use. So there are so many different types of financing. I don't know, actually, Laura, since there seems to be a lot of questions about that, do you want to just break down what different types of financing they could use?
Yeah. I was going to get the Q&A here in a minute, but yeah, we can do it. The best way to illustrate is probably saying how I started, because I mentioned that I didn't have any much money per se. And then you're going to share here a couple of case studies, Maria, about some of our students. But the thing is this, where there is a will, there is a way. And I knew that if I was going to go out there and create and look for different opportunities, in the beginning, I wasn't picky about the properties of the area, to tell you the truth. I was such an aggressive way of buying. I wanted to buy anything where the numbers made total sense, where I was going to increase my cash flow exponentially, because my goal was to reach $5,000 in a year. And like I said, actually, I doubled that in 18 months. So with that said, I was looking for any type of where owners were willing to work with you. So like, for example, lease options, contract for deeds, subject to, even partially, where they were willing for me to, maybe help me owner financing, but also give me maybe a second mortgage for the down payment. Also, when you work, and some of them were asking earlier in the chat, how many properties do banks allow you to purchase? When you work with smaller regional banks and credit union, not the big ones like Bank of America or Chase, they put a limit. But when you work with smaller banks, it's more relationship based. And since they are investors funded from the people that use the bank, the depositors, they make their own rules. They're regulated and protected, but at the same token, they also make their own rules. So you can do a lot of things that you cannot do with bigger banks when you work with smaller banks. So you can buy 10, 20, 30 properties using bank financing. The only thing is that they want to have strong financials. So, they will take only 75% of the rental income to really qualify you for a loan. So if you keep 75%, so they want you to cash flow, and honestly, I appreciate that because I was buying especially when you go into over 4 units, you get into commercial. They analyze the financial and they let you know, no, you can't, we're not going to fund it because you're not going to make any money. So they help you look at and the same thing with private lender. They help you to really analyze the deals, and they're never going to loan to you if they think that's not going to be a safe bet. So you need to look at it that way. But I started with a lot of owner financing. And it was as simple as picking up the phone. Anything that people wanted to rent out, I would ask, I know you have a property for rent, and would you be willing to, are you considering selling sometime in the future? And if they said yes, I said, well, I want to rent it from you then, and that's how you structure a lease option to buy. That's just one of the ways. The other thing is talk to hard money lenders. A lot of some of the first property, even my first fix and flip that I did, was something that was repossessed by, foreclosed by a hard money lender. So hard money lenders, smaller banks and credit unions are much more flexible to work with newer investors, and they will finance up to 100%. If it is an area where they want to see redevelopment, especially since it's a small regional bank, local bank, they have more of their money invested in the city. They also get grants from the city. So they will loan on properties that they want to revamp the area. So in areas that, yes, maybe they're a little rougher, but I got 100% financing plus the money to fix it up from local banks. So this is some of the ideas. And like I said, it's about being creative and thinking outside the box. So if you expect to grow a portfolio, putting 20% down on each property, you're not going to do it. Okay. And if you talk to anybody that has accumulated a ton of properties, what we have in common is one thing. We use private lender, we use leverage with creative financing. We went into money partnership. We structured deals, not with the banks, but with the owners, with other people that had the money. Once you start doing it, people that have the money will come to you. I have people chasing me down, asking me if they can give me the money. They just want a return on their investment. My own dentist, same thing. He asked me, he said, you need money? He said, I just want a return. I don't want to be managing real estate, but I always work with investors that can do fix and flips or rentals and just give me a return on my money. So the people are out there. And the biggest thing, guys, you have to tell them what you do. If you don't tell them you're a real estate investor, they're not going to know. If you don't put it on your social media profile, if you don't really claim it, that you are, doesn't matter if you don't own any property. You decided you want to be a real estate investor, that's good enough. Okay. So I just want to go into this rant. Hopefully it helped you, but to understand as far as financing, that's something that most investors are worried about. There should be, sorry, my dog is going crazy. There should be the least of your worries. Okay. Find the deals. Now, Maria, do you want to share the screen with a couple
I
of case
do.
studies here, Wendy and Letitia?
Absolutely. So we have taught a lot of women, I'll put it that way. And the reason I wanted to share a couple of case studies with you is because you might be listening to me and Laura, we've been doing this for a long time, and you might not believe we started exactly where you are right now. But these are ladies that have started very recently and gone through our program. And so I wanted to share some of their results because it's awesome and it's pretty typical of what we see. Because at the end of the day, we do show you basically how to find the lenders, etc., etc. We have Rolodex's list of private lenders. We do all kinds of things. Again, the know-how is easy. Really, what matters is your why, and are you going to actually make this come through. So let me show you the Wendy, for example. We love Wendy. She actually, which we feel bad every time we think about this, she had spent $20,000 enrolling in a program. She really wanted to get started in real estate, so she found this program. It sounded great. and she invested $20,000. After several months of that, she was exactly in the same spot she was. And before investing the 20,000, she was getting no support, and she was actually growing frustrated because basically she had made an investment that was now wasted. And then she ran into us. She joined our community and shortly thereafter bought her first rental. She was a beginner when she started, and her first rental she turned it into a short-term Airbnb. And within a few weeks of doing that, of buying this rental and turning it into an Airbnb, she became a super host, which was super exciting for all of us because we celebrate wins. So we're very excited about women becoming, growing into their own. And so she started this, she turned this into an Airbnb, and she still has it to this day. I mean, she started in September 2023, so it's not that long. But now she's also bought a midterm rental and a long-term rental. Now, why does this matter? In fact, I hope you guys downloaded the free ebook, because we go into detail about the difference between one and the other. But the main thing is that the market is shifting, as we've been saying. And one of the things that's happening is that midterm rentals are very profitable, because a lot of people, especially younger people, Laura was referring to this, millennials, Gen Z, they don't really want to buy houses. They want the experience, they want to travel, they want to be they want location freedom. And therefore, this is a huge opportunity for us. In fact, I have a midterm rental myself, and it's really very low maintenance. By the way, you don't have to do this maintenance, okay? This can be absolutely virtual, like everything else. And it's just really a powerful strategy. But what she's doing is she's trying different strategies, which I love. I think is brilliant. So she can decide based on her time availability, because she's married, she has a family, she has a full-time job, which one makes her more money, and she'll go based on that. Now, she's done 3 deals in a year and a half here, and in a couple of years. And basically now she's decided she's going to buy 1 rental per quarter. This is incredible to me, and I love it. And she does like the midterm rental, so I think she'll do more of that. I want to show you Leticia, since we've been talking about her. Leticia was a housewife, as Laura said. And so she was thinking, how can I make this happen? She had been interested in real estate for a while, and she had never jumped in because she thought she couldn't do it. You guys, we totally understand when you say that, right? Before you get the right education, you might believe what the world tells you about real estate. It's hard, it takes money, and all these things. In reality, none of that is true. Those are myths that basically hold a lot of people back, which is unfortunate, because real estate is such a great opportunity. And so she eventually said, why don't I look into it, since I am interested in real estate? Join our community in 2020. And basically, she didn't have a job. And so what she did, though, she did have the ability to get an equity line of credit on our house. And that's how she bought her first rental. And after that, she started refinancing her rentals to buy the next property. She's never had to put any more of her money into anything. She's gotten all her money back from the first deal by refinancing. And the funny part, just to tell you how much this is part of her strategy and how she's growing, not only she has 7 rentals right now and counting, but when I spoke with her a couple of weeks ago, I was checking in on her because I've helped her buy some rentals, because she buys in St. Louis. She was telling me that she was in the middle of refinancing the last rental she's bought. I'm like, I love it. I just love it. This is the thing, is that the point is that in our community, we help real people achieve real results. It's about actually getting stuff done. And it's not about what I want you to get done or what Laura wants you to get done. That's why we had you put down your plan for yourself. The question is, what do you need? What amount of time do you have to invest? How long do you want this process to take? How quickly do you want your passive income? And based on that, we build, especially if you're one of the, as Laura said, we still have 3 or 4 spots for one-on-one game plan. We help you build your strategy based on that. And again, we reverse engineer what you're trying to achieve. And based on that, you get this plan, this roadmap where there is no guesswork. This is step-by-step guidance because that's what it takes. That's the difference. That's why Wendy wasn't getting anywhere with that other program, because I'm sure it was great information. Anybody can talk about rentals. Rentals have been around a lifetime. The strategy doesn't change. But what changes is how you achieve that strategy and what makes sense for the current market. One thing we haven't mentioned is that because we just take it so for granted, even though it really is a unique situation, is that Laura and I, just like Liz, just like every other coach in our program, we are active full-time investors, which means that when we talk about a strategy, it's what is working for us, how we are buying right now. It's not something that we used to do 5 years ago, 10 years ago, or that we read somewhere, we read books about. And because of that, we are able to modify strategies based on what makes sense right now. So when Laura tells you this is how you can do seller financing or creative financing, et cetera, we are leaving the banks behind. We don't need banks unless you're using a bank, like you're going to a bank that actually has like Laura was mentioning, a portfolio of foreclosures that they need to unload, and then we'll teach you how to deal with that as well. But I just wanted to show you a couple of case studies. I know we're trying to keep this short, but I always have so much pleasure in showing, how our students are doing. I'm excited.
So what I want to do here, and all the questions, by the way, if you want to start posting, I'll make sure I address every single question, guys. Okay. And so, I just want to share with you a little bit about the program itself so that you have the chance to jump in. We're going to shut down in 3 hours, and that's it. We're not going to probably open it up anymore. I don't know if it's here or not. We are actually not doing any promos for any program particular until after the summer. So, and then after that, I have no idea. So the rentals is a little different because there is a lot more moving parts. I also just re-recorded this whole training. So this is brand new training. It's not something that I recorded years ago. I actually did all the training for wholesaling, buy and hold, and fix and flip at the beginning of this year. So this is fresh off the press because like Maria said, things change within the strategy, right? Where you get the property, where you get the money, how you structure the deals. You have to understand what the different rules and laws and things that are happening that you need to know in this industry. So let me share with you very quick the rentals page here, and then we can start taking your questions. So let me see, where did they go? Okay, trying to find it here, sorry. There you go. It takes me forever to do something. I never do it, that's why Liz does.
You are being spoiled.
I know, I just sit there. Okay, so let me share this. Does everybody see this? Okay, so when you click on the link that the team is putting there, you're gonna get to this page here. And but what I want to scroll, there's a lot of things here, what they can help you do, who is it for? A couple of things that helps you here. You get appreciation, cash flow, and tax savings. The way I look at properties is, for me, they have to cash flow from day one. Okay, I don't care much about appreciation that happens that years down the road. I like the tax savings part, especially if you're wholesaling. You can wholesale and buy rentals at the same time. And that's very, very good idea because it offsets a lot of the gain that you make from wholesaling. Okay, so buying rental properties while you wholesale, one of the things I teach the students strategy wise is you generate leads, and then you cherry pick the ones you want to keep a rental and you wholesale the rest. By doing it this way, you also create what I call wholesaling my ATM machine, where you use the money coming in from wholesaling to pay off the rentals. Actually, a couple of coaches in our community that used to be students of ours, Jimmy and Patricia, exactly what they did. They actually started buying rental, got highly leveraged, then jumped into wholesaling. A couple of years later, they realized they liked it. Used the money from wholesaling, paid off the rental plus more rentals. So that's how it is. Okay, so this is all the steps that you get. So I'm not gonna go every single one, but I want to let you know that everything is designed very step by step. So when you get into the program, you're actually going to get the checklist. It's called the 4-week checklist, but don't stress you out. If it takes you longer, it's okay. You're not running a sprint here, you're a marathon, okay? So, but everything, it goes into different steps. So it's done sequentially, like define your goals and strategy, build your financial foundation, where you get to find the money, research and choose your market, build your team, understand property analysis, acquisition plan, leads and negotiations, and so forth. It goes into everything that you need, and you find everything in the checklist. So the way I created this checklist is everything in the checklist matches what's in the training. Because a lot of people complain that when they get into these trainings, right, they want to spend $20,000, they throw to you a bunch of videos and stuff, and then you have to figure it out. And people get discouraged, overwhelmed, they don't know where to find the stuff. So I wanted to make it very much connect the dots. So you get the checklist. Okay, this thing on the checklist, you have to go find it there in the training. So you move in progression. So before you know, you got deals under contract, you're actually closing deals, okay? Also, I created a short, mid, and long-term rental playbook. So that's something that you're also gonna get. So if some of you are interested in short and mid-terms, you don't have to join any other courses, it's in there. And also we have limited one-time VIP bonuses. So we have a 4-week challenge. We just finished one, and then we're gonna start another one. These 4-week challenges, actually we finished, I think it was for wholesaling, but these 4-week challenges really is something that goes together with the checklist that you're going to get. And but you can interact, you can go into the group, and we post a training and things like that. You get a community forum. So that's where the challenge is going to be posted, but also you get to know everybody else in the community. And then also you get scripts to win deals and buyers fast, and live real-time group coaching calls. So you can ask questions. Now, this is a 12-month program. However, we have a special chance tonight that if you pay full bonuses, the most important one is the lifetime access. So if you do pay one time, like I said, we have a firm and Klarna, so you can use that instead of doing, we have an in-house payment plan too, if you can't afford, if a firm and Klarna for some reason doesn't approve you. But if you do get the lifetime access, if you do the payment like that, or you can pay full. This is super important, guys, because I put new stuff in the training. I also redo the training or parts of it as things change. So you can have this training, you can come back 3, 4, 5 years from now and say, see if anything has changed on how to get leads, how to get the money, how to do anything, right? You're always welcome to access it. Then you get a personalized one game plan. When I opened the program at the beginning of the week, there were 12 spots. I believe there are only 3 or 4 max available. And then after tonight at the end. So if you're interested, I suggest that even when we do the Q&A, go ahead and jump in and reserve your spot. And then here also I included, this is for some of you that are maybe a little more advanced and looking already thinking, okay, I want to build long-term wealth, but how do I scale up? How do I invest into larger property? How do I protect my assets? How do I do a lot of things? I actually created this advanced tax strategy and asset protection. Now, I want to do a disclaimer. This is for education purposes only. I still want you to consult a CPA and attorney for more detail, because there are different rules depending on the area and depends on your income and so forth, but that's included as well. We have more success story. We have some videos here. Tiffany's been with us like 3 or 4 years actually. So a lot of testimonials here. So, I don't want to spend a lot of time there, but if you click the link that we gave you, you're going to go to this page. And then here is, you can click on there. Like I said, we have different type of payment plans. There's some Q&A here. And yeah, and if you do have any question before you make a decision, go ahead and book a call. Now you need to book tonight, only for tomorrow. So if you do have some questions, Doreen here is here tonight, and she will be glad to jump on a quick call with you if you have any more questions before you buy into it. But like I said, you would have to book the call this evening in order for us to honor it. Otherwise, if you click the link tomorrow, it will go to a wait list page for when we're going to open it sometime in the future. Okay, so now we got this part done. So while you guys go ahead and look over that page, we can start answering some questions.
Absolutely.
And
I was going through, yeah, if you want, I can ask the questions and then either you or I can answer them. But we already touched on the financing. There's so much to financing, guys. It's something that once you get into the program, it will never be a worry for you anymore. You're just going to be picking whichever finance strategy you want to use. And then in terms of Jennifer was asking about, she was worried about headaches from tenants. And I'll just say, I mean, I refer to it when I said use property managers. You don't have to be a property manager yourself. Not only if you know how to pick tenants, which of course we teach you how to do that, the screening process, et cetera, you're not going to have problems with tenants. I can tell you, I told you, or I already mentioned it. I have tenants that I inherited with the building. And they didn't like me that much when I bought the building because we were bothering them. We were there in their house, 3 or 4 times before we closed. And I remember buying them a Starbucks card when I closed and thanking them for their patience. And they told me, well, we're going to move out, and they were probably 6 months into their lease, whatever. They have now already extended their lease twice. In fact, one set of tenants just extended it by 2 years because they just don't want it. And they keep telling us, we love you guys. We never want to have any other landlords. You are going to have the best tenants. Most people are nice people. And if you treat them nicely, they will respond in kind. So I'm not worried about tenants at all. And I've had a lot of rentals in my life. So I think that's just what we hear. We only hear about the horror stories, right? But normally those people are not screened well, or it might be areas where you shouldn't be buying the same to begin with. That's why we put such high emphasis on picking the right area. And as I said, we call that even pre-training because it's so foundational. So you're good with that. All right, let's see what else. Let me see. Okay, and we answered how much do you increase rent yearly? It really depends because, as I said, I've been increasing it about 10%, and even then I'm under market. And the reason I stay under market is because I don't want my tenants to go anywhere, and I'm going to keep increasing at least $100 every year, and they love me for it. So it's amazing. A lot of things are just preconceived notions we have just from looking at things from the outside, but we break all of this down for you, and you'll realize that a lot of things are out there to hold people back, people that are not in the know. Because a lot of the stuff, just investors don't want competition. And they're like, let's let everybody think that the rentals are the hardest thing ever. So Sandra was asking, do you have a regular loan with closing costs, etc.? You absolutely can. But like Laura was saying, we generally don't even go there. Well, I mean, there are so many seller financing deals you can do and so on, sub 2 and all kinds of things. So that's different types of purchasing. Let me see. If you guys want to put your questions at the bottom as well, I'm just scrolling through because I want to make sure we don't miss anything. So do you think house hacking is possible in today's market? Absolutely. With today's rates, absolutely. We have so many ways of doing this. And is it hard to find a property that positively cash flows? Yes, it is hard to find it. We don't find it, we make it. And let me spend a minute on this. We teach you how to negotiate, not just look in the right areas and go to the right people that may have motivation to sell to you, but how to negotiate the deals. Imagine if the deal was already out there, what are the chances you get it? Everybody would be looking at that deal. We teach you how to create the deal. This is why we have no competition when we get these deals. Laura was talking about how she was calling people that had houses, that had units for rent. And she was asking them, hey, do you think you're going to sell at some point? How many people do you think were doing that? It's probably Laura. That's it. This is what we teach you. This is where you go from just being the public, standing on the sidelines, to being an insider and a professional investor. This is where the money is. So absolutely, that's a good question though, because that's what most people think. It's like, oh, I can't find properties that are discounted. You're not going to find them. You're going to create them. You're going to target the right property, and they're going to be open to giving it to you at a discount. And it's absolutely possible. We're doing it right now. In fact, I was in the process of buying something that fell apart because the seller was crazy, which is fine. Next, he's lost. And it was also cash flowing. There's tons of cash flowing stuff out there at today's rates. So let me see here. Apart from USDA, yeah, so many loans. BRRRR. Okay, so you're familiar. And BRRRR stands, just for those of you who haven't heard this term, is buy, rehab, what is it? Rehab, what else?
Rehab, rent,
Rent.
refinance, repeat.
Yes. Yes, thank you.
Because you want to get the rent, you want to get the money from the rent in order you can refinance, especially if you use a DSCR and then repeat.
So how many times do you refinance one property? Oh my God, I have a plan to build a set of properties right now, and then I'm just going to live off of refinancing. In addition to the passive income, every few years I'll take, a few $100,000 out. You can refinance them forever. That's why I call it just like a savings account. Every once in a while, you go in and take out a bunch of money that you didn't even put in because this just grows on its own. And one of the ways to do this, I'll just give you a little hint, is by increasing the value. We call it forcing equity or accelerating equity. So what I'm doing right now with the fourplex, I am basically taking it to the next level of prices by doing some renovations. The cost of renovations is a fraction of what I'm going to be able to take out as a refinance. So, and again, we teach you this. So apologies for the noise in the background. I have a young child who doesn't quite understand webinars. All right. Sandra, we are very open about this. Just check out for the program, check out the page. It also answers a lot of questions. So because we are very open and we want you to know what you're getting into, because we like our students to be happy, and we are serious when we say we want to take you to your goals. Okay, so absolutely, just check out the page.
Click the yes, I'm in button. Don't worry, it's not charging you. You go to a checkout page and it will give you different options. You can pay in full, you can have the in-house payment plan, or you can have the Klarna and Affirm. So click the button, it will get to a checkout page and it will give you all the different options.
Absolutely, yeah. Do you use a realtor to find properties? Laura, why don't you answer?
Well, one of the great things about rentals is that you don't have to source your own properties. Yes, you can definitely use a realtor. You can use another wholesaler to bring you deals. Yeah, you can do what I call the MLS strategy. So there are different ways you can use it to source deals without you having to do all the cold calling and driving around and so forth. You can definitely do that too, but honestly, it's kind of faster to go some of the other ways. I call them the quick win ways.
Yeah. Then again, I'm a realtor, and so I often, just end up representing myself, but you absolutely don't have to do any of that. It's really, we have so many different strategies that you can use. Now, what is considered a midterm rental? So a midterm rental is any furnished unit, which could be a single family home or an apartment building, condo, whatever, that is rented out for over 30 days. Okay. Otherwise, below 30 days is considered short term. Short term rentals are difficult because there are a lot of new permits required, etc., around the country. Midterm rentals are really very profitable and very low maintenance right now. So if you're thinking of doing, it's almost like the hospitality business, definitely midterm rentals is the way to go. And then let's see. And Mary says, I'm a widower, do not have cash on hand, but I have equity in my home. I think the reason I haven't pulled the trigger to buy one yet is I'm afraid of bad investment and lose my money. Absolutely, I can empathize with that. Do you analyze the deals with students before they buy? I'm sick of sitting on sidelines for years. I always wanted to do this. I would feel safer when a mentor doing it with me. So now, actually, I don't know if you want to explain a little bit how this program works and what other options they would have for a mentorship if they're interested.
Yeah, I think, Mary, the best way would be for you to schedule a call, and then we can talk more, what you want to do and also how you want to do it. Because, yeah, I mean, I hate to do cookie cutter, especially when somebody has certain fears and certain things. I want to make sure that you make a informed decision. And so as far as the level of support, so we have different option for support, and so but we need to know what you're looking for and how we can better help you. So do book a call. Doreen will be talking to you, and you'll love Doreen. She's super nice, very laid back, and no pressure whatsoever.
Yeah. And just so you know, Mary, this is a very common fear, and I think it's smart of you to be concerned with that. Nobody likes to lose money. I hate losing money. I don't do losing money. I educate myself. This is like, Laura is laughing because I tell her all the time. So I've had so many coaches during my investment career because one, I wanted acceleration. I didn't want to wait 10, 20 years to be able to buy something, or I just wanted it now. Right. And the second thing is that we have a saying in real estate, which is you're going to pay for it one way or the other. You're either going to lose money on deals or you're going to pay for education. At least it's capped. and you know how much you're going to be spending, and then you use that to springboard your entire career. And I'm always believed that education, it's just like going to college, right? You go to college, by the way, this is a fraction of college cost. And not only is very quantifiable how many times you're going to make the money back with college these days is a little iffy, but this is like going to college. You prepare for what you want to do, and this is exactly what this is. When Laura started, and we haven't taken a lot of time to go into her history, but Laura always says when she started, and I'm not trying to make her sound like she's that old, she is not, but there wasn't coaching available, so she literally had to use school of hard knocks to learn. Yeah, these days we have we're lucky that we have the chance to actually just learn from people that have done it 1,000 times before, so that we don't have to make mistakes where we end up losing money. Why should you lose money when there are so many ways of getting rentals who are actually going to add to your bottom line? So there's a reason why you guys are here at the end of the day. I don't believe in coincidences. I believe that everything comes when it's meant to. So absolutely, Mary, we're looking forward to talking with you again. There's absolutely no pressure. We just want to know exactly what you're trying to do so that we can tell you the best solution. And this is true for all of you. So let's see. Oh, okay. How many coaches are available to help the students? Yeah, okay. And Alexander already said that we have 5 coaches, etc. We have an a Facebook group, etc., etc. So we do a lot. So the way that this program is set up is very much step by step. And as Laura said, we start with the end in mind. So we tell you exactly what the steps are, so you don't get overwhelmed by all the training, because there is so much training, guys. Okay. But we don't want you to binge watch for 3 months instead of buying a property. We'd rather you buy a property the first month or two, okay, and start making money right away. So the way we set this up, we have calls, we have the training set up to where you know exactly this is the module I need to go look. It is very, very manageable. All right, that was the point. This is why I say we, really, Laura is the person that came up with this. She broke down the process. She's told herself, what would I do if I were to start over? Okay. And this is exactly what came out of it. So I totally, you can understand the reason you're asking these questions. This is not common, but this is how Laura has envisioned this program. And that's why we have so much success with it. So are Section 8 affordable rentals a good choice? I don't know if you want to answer that, Laura, real quick.
Well, yeah, but one of the things that you have to decide at the beginning when you become a landlord is what type of landlord do you want to be? What type of properties are going after? Who are going to be your tenants' avatar, as I call them, right? So that's the thing. If you want to do Section 8 property, absolutely. You can even do very much of a niche within Section 8. Maybe you could do Section 8 single moms. So the thing is, you have to decide what you want to do, and then different Section 8 offices have different requirements, so you need to get informed with what the requirements are for that particular area. And yeah, I've done a lot of Section 8. I like them. And you still have to screen the tenants like anything else. So.
Oh, absolutely. Yeah. And so taking hard money will finance all purchase, repair, and closing costs. Absolutely. That's how I've done it. That's how Laura's done it when we use hard money. So yeah, it's like everything else. It's who you find, right? But knowing that it's possible, then you know how to interview people. And then let's see, how do I find off-market properties to use the 70% rule? Okay, that's an interesting question, because the 70% rule is not a real rule. Yeah, there are a lot of programs out there, and even investors that talk about the 70% rule. Normally people like me, I have a lot of buyers that will call me and say, hey, I will ask him, what's your buy box? And because I wholesale as well, so people will call me and say, do you have any properties? And I ask them, what's your buy box? Meaning, what are you looking for, basically, right? And they'll tell me, the normal. I'm like, what's the normal? And it goes, oh, no, 70% minus repairs. And I'm like, rolling my eyes, because I'm like, I'm never going to bring you anything. Because here's the thing. Each property is different depending on the price. The 70% rule doesn't work. And you're going to be, if you follow that rule, you're going to be cut off from deals that are really, really good. There are landlords, let me tell you right now, there are landlords who, if you are wholesaling, meaning that you run into a bunch of properties, you decide to keep 2, but the other 5 you're going to sell because you're not interested. These landlords will pay over 80%. As long as the property cash flows, it doesn't really matter what they're paying. So do you see the 70% rule does it? It's just a limiting factor that, again, it sounds fast and easy. That's why people talk about it. Oh, 70%, but it doesn't really apply. Okay. It does apply to some hard money lenders, but there are other hard money lenders who will finance 85%. So I don't want you to limit yourself by thinking that that's a thing. It doesn't have to be a thing at all. And then a bargain compared to grad school. Siobhan says this is a bargain compared to grad school. Oh, for sure. In fact, it's not even close to 20,000 since we're talking about $20,000 programs. It's not even close. It's a fraction, guys. All right. And then senior residential housing. I mean, it's absolutely a niche and absolutely something you can do. We do not go into it, but it's absolutely a niche that you can have. In fact, I was actually trying to open something like this. Of course, it was awful timing. I did this in 2020 when basically before COVID, and then COVID started. So I ended up not pursuing it. But there's a lot of money to be made in that. And so now we're going into basically you're looking for a niche of tenants, which could be graduate students, undergraduate students, could be seniors. You can do basically, we teach you how to be safe, meaning how to buy right, where to buy to make sure you have the income you want. And then from there, if you want to scale, which we can help you do the scaling part as well and go into particular niches. We have one of our coaches, for example, she does a lot of student housing. And so absolutely the sky is the limit. So I like how you're thinking, Siobhan. That's a very good question. So, and do you invest in mobile home parks? I don't know, Laura, if you want to.
Jimmy and Patricia do. They're our coaches, and actually they have done several of those. I think they own right now several of those. So yeah, they own several mobile homes.
Yeah.
Now he did a mobile home park, but I'm not sure if he still has it or if he flipped that one. But he did one a few years ago too. Yeah, and there are coaches in our community. So if you do have an interest, I would suggest talking with them, and they can definitely help you. But that's why Mary, I think it might be benefit from booking a call, and then we can answer, so make sure that we're a fit.
Yeah.
Great. Well, thanks everybody. Glad that you group here stayed on, and I know some of you are already students, so thanks for being here tonight and keeping us company. We do shut down the program here in 2.5 hours, so that's kind of non-negotiable. So if you are interested in rentals, go ahead, jump in, and if you do have more questions, just go ahead and book the call right now, and then Doreen can talk to you tomorrow, and I will still honor the lifetime access and everything if you do join after you talk to Doreen. So thanks for being here, and hopefully I'll see you on the other side.
Yes.
Take care.
Bye-bye.
Bye.
Good night, everyone. Are we going to keep this open for another minute or two so they can? Yeah.
I'll shut it down. Doreen, if you want to just let me know when you're all good, and then I'll shut the Zoom down.
Yeah, we just want to make sure you ladies get the link so you know where you're going. And as I said, we answer a lot of the questions on the page, so that would be quite helpful to go through it. All right, good night again.
Yeah, I think we're good, Alex.
All right, sounds good.
Good night. Thank you,
Thanks.
ladies.